All right, moving on. Early stage venture capital fund India Partners has achieved a near 1x DPI return on its Fund 1. The venture claims it achieved this exceptional performance in just 8 years, and this sets the stage for greater impact in the years to come. Now, remember, CRISIL's AIF benchmark report for March 2023 highlighted a prevalent challenge in the industry: low total distributions to paid-in capital, or DPI. Now, in stark contrast, India's performance showcases an impressive nearly 1x DPI, establishing a new benchmark that is double the industry average for funds of the 2016 vintage. To tell us how India has been able to achieve this, joining me now is its founding partner, Satish Andhra. Satish, first of all, congratulations on achieving this feat. And tell us what led to this performance, what contributed to 1x DPI return. Also, if you could, in layman's terms, explain what DPI is and its importance.
Thank you, Shruti, for having me on the show. Appreciate it. In terms of DPI, it basically means the capital return to LPs. It's real cash. It's not a markup. Achieving it in 8th year means you've returned the fund per se, and rest of the fund life cycle, they get the upside. The reason for our success, I would say, is obviously thanks to the brilliant entrepreneurs we funded, and also focus. We've been thematic investors from the get-go. So we focus on few sectors. And we're also an operator investor. We work with our entrepreneurs, rolling up our sleeves and helping them to take the company to the next level. But always, timing, a slice of luck play a very important role. So to kind of double click on what you asked, the significance of DPI, just like for startups, valuation is important, but valuation doesn't mean anything, right? It's a paper markup. And eventually the realized value is the real value. So very similar to that from a venture perspective, venture funds perspective, you could have multiples on invested capital, but eventually all the benchmarks and even LPs look at what is called as DPI, which basically is the real cash that's returned back to the LPs, as opposed to the simple markup.
Yeah. All right. Satish, you call yourselves operators and not just investors. What's the difference? And also, while the 1x DPI return from Fund 1 speaks volumes about India's investment prowess, tell us how the impact extends beyond financial metrics.
Yeah. So very clearly, like I said, there are 2-3 things that are the critical success factors for us, or the drivers for our success. One is we're not all things to all people, right? So we don't invest in e-commerce or D2C or B2B exchanges. We've always invested in product startups, predominantly product startups that are building for the region or product startups that are going global. So if you really look at, I'll talk about, the metrics that we have achieved. And these metrics are not our reflections, but what the industry, kind of benchmarked. Right. So for every dollar we put in, our portfolio companies have raised $24 from other investors. And likewise, there's a metric called graduation rate. How does your portfolio move from one stage to the next stage, from pre-Series A to Series A, Series A to Series B, and Series B to Series C? If industry average is kind of 30% graduation from one stage to the other stage, we've kind of, gotten to 75% of our portfolio graduating to the next level. And the real reasons are, like I said, focused investing, thematic investing. Very early on, if you look at 2016 was our Fund 1, 2020 was Fund 2. Later this year, we'll start investing from our Fund 3.
Okay.
We invested in Darwinbox, right? So SaaS was not very well known at that point of time.
I was about to get to this point. Satish, your portfolio consists of multiple category creating companies. If you could take us through your deep tech AI companies first, the kind of impact they've created, and how do you see the sector performing this year? And then if you could also talk to us about SaaS companies and how they need to rethink their models with the coming in of AI.
Yeah. So, in 2017 or so, we invested in Sigtuple, right? Sigtuple is AI pathology, AI digital health. 2021, 2022 is when the world is talking about Gen AI and, of course, all of the infrastructure for AI services. So for us, to be able to compete in this business, venture capital is business of brands. For India partners to compete, we need to predict where the puck is going to be. So that's kind of how thematic investing approach helps us a lot. Similarly, the Steradian semiconductors, a chip primarily that classifies objects in its neighborhood, right? So whether it's an autonomous vehicle or a drone or an industrial robot, they need to make decisions at the edge. So to make those decisions, it requires chips because camera images in low light or fog will not be able to help you classify objects. We funded Steradian Semiconductors, and countries talking about semiconductors in 2023, but 2017 was our Steradian investment. So similarly, when we invested in Darwinbox, SaaS was kind of fledgling, but of course we continued focusing on SaaS because Luri and Scrut were investments from our too, right? So in terms of whether it's digital health or biotech, cell therapy, or you look at mobility, these are sectors we're able to kind of make bets. As an early stage investor, we go in first, and then Series A, Series B investors, they follow us.
Okay.
Right? And we've very select fintech investments as well.
Sure. Satish, unfortunately, we've run out of time, but many thanks for joining us on Startup Street and wish you the very best and congratulations again for achieving this feat. Thank you so much.
Thank you, Shruti. Thanks for the opportunity.
On that note, it is time for us to head into a short break.